Hey everyone, welcome back to Corporate Decoder. This filing is about an annual report for a company that is pretty new, and the numbers look well. Let's just say they are interesting and it makes you wonder what kind of company this is going to be. Before we dive in, if you love getting straight talk about what companies are really doing and what their financial reports actually mean, make sure you hit that subscribe button and the notification bell. And hey, if you want to connect with other like-minded folks and get even more exclusive content, jump into our Discord server, link down below. Let's get right into Hamco Ventures Limited's annual report. This is a company that is just getting started, and a lot of what they say is about the future and the challenges they face. So this is a Form 20F, which is essentially an annual report for companies that are not based in the US but are registered with the US Securities and Exchange Commission. Or the CC, it is like their big yearly check in with investors. This report covers their fiscal year that ended on the 30th of June 2025. Now, a really important detail here is that Hamco Ventures Limited is considered a non-accelerated filer and also an emerging growth company. What does that mean? It means they don't have to follow all the same strict reporting rules that bigger, older companies do. They get some breathing room, which is understandable for a company this new. As of the 30th of June 2025, there were about 205 million ordinary shares outstanding. That is the basic stock that most people would own. Alright, let's dive into the numbers. Looking at their consolidated balance sheet for the 30th of June 2025 and 2024. First up, cash. In 2025, they had about $54,000 in cash. That's down from about $120,000 in 2024. So their cash pile got smaller, which isn't ideal, but for a new company, it's not entirely unexpected. Total assets in 2025 were just over $54,000, down from about $137,000 in 2024. This just reflects that cash decrease. On the other side, liabilities, accounts payable and accrual were about $27,000 in 2025, up from about $15,000 in 2024. This means they owe more to suppliers or have more accrued expenses. And then we get to shareholders' equity, which is essentially what is left for the owners after all debts are paid. In 2025, it was about $19,000, a big drop from about $117,000 in 2024. This is largely due to the accumulated deficit, meaning they lost money. Now for the big picture on how they performed, let's look at the consolidated statements of operations. For the year ended the 30th of June 2025, they reported zero service income. That is right, absolutely no income from their main business activities in the most recent full year. And what did they spend? General and administrative expenses were a little over $97,000. A significant chunk of that, around $75,000, was written off IPO costs. So that is money they spent in anticipation of going public, which apparently did not pan out as planned in the way they expected. This all adds up to a net loss of about $97,000 for the year ended the 30th of June 2025. For the shorter period they were active in 2024, the net loss was about $8,000. It's clear this company is burning cash as it tries to get off the ground. Let's see where the money actually went. The consolidated statements of cash flows tell us this. In 2025, they used about $36,000 in cash for operations, mainly for general and administrative expenses like audit fees. In the prior period, they used about $9,500. Investing activities used about $33,000 in 2025, and this was for payments related to these IPO costs that were written off. So it looks like they spent money on trying to go public. Now, where did they get money from? Financing activities provided about $3,900 in 2025, mainly from selling ordinary shares and from an amount due to a director. In the prior period, financing activities provided a much larger $129,000, again from issuing shares and director loans. This leads us to a really critical point. The going concern note, the auditors have flagged substantial doubt about the company's ability to continue as a going concern. Basically, they are not sure if the company will be around in a year without more money. They have very little cash, no revenue, and need significant funding to keep operating and to implement their plans. They are hoping to raise more money, but there is no guarantee they will succeed, and if they don't, shareholders could lose their entire investment. This is a major red flag. So, what does Hamco Ventures do? Let's scroll to their business description. They are a franchise development consultant company. They help businesses, specifically in the food and beverage industry, figure out how to create and manage franchises. Think of them as advisors for companies looking to expand through franchising. They analyze markets, do feasibility studies, and help with strategy. They currently operate in Hong Kong and plan to expand. A really striking point is this: as of the 30th of June 2025, they had no employees, zero. This means all the work, including management, is being done by just a couple of directors. And who are these directors? We have Chun-Long Chow, who is the CEO, CFO, and a director. He has a ton of experience in finance and investment. Christy Ju is the Chief Operating Officer and a director. She also has a very impressive background in hospitality, finance, and consulting. However, with only 2 directors and no employees, the workload for them must be immense. Now for ownership, this is where it gets really interesting. Chun-Long Chow, the CEO, holds a significant portion of the ordinary shares, but he also holds all the preferred shares. And here is the kicker. Each preferred share has 10 voting rights. This means Mr. Chow controls about 77% of the voting power, so he has almost complete control over the company. This concentration of power can be good if he has a clear vision and executes it well, but it also means minority shareholders have very little say. The risk factors section in this filing is quite extensive. It is like a company listing out all the ways it might fail. Some of the biggest risks mentioned are that they are a newly formed company with no operating history and may not be able to continue as a going concern. This is basically the auditors saying they might go bust. They also face strong competition and may not be able to effectively promote their brand. A massive chunk of the risk factors are related to doing business in Hong Kong and the potential influence of the Chinese government. They highlight the legal uncertainties and the possibility of changing regulations impacting their business. And then there is the penny stock designation. Because the share price is low and they are not on a major exchange, trading can be difficult, and there are extra rules for brokers that can make it harder for investors to buy or sell shares. This can lead to a lot of volatility. So what is my take on Hamco Ventures Limited? It is a company trying to break into the franchise consulting space with a very lean operation. They have a lot of ambition, as shown by their focus on global expansion. But the financial reality is stark. Limited cash, no revenue, and an auditor's warning about their ability to stay in business are huge concerns. The heavy reliance on one individual for voting control is also something to watch. They are essentially a bet on the founder's vision and ability to raise significant capital very soon. The risks are undeniably high, but for a truly bold investor, the early stage might offer a chance at significant returns if things go right, and if they can secure that crucial funding. It is a high risk, high reward situation with a lot of question marks. Alright, that is our deep dive into Hamco Ventures Limited's annual report. What do you think of their prospects? Let me know in the comments below. If you found this breakdown valuable, give this video a thumbs up and subscribe for more corporate decoder content. And seriously, join our Discord community. You will find the link in the description. Thanks for watching and see you in the next one.